We love all the questions you send, and we're going to dip into the helmet and answer a few of them right now. Should I get a fixed rate, and for how long, or should I take a variable? Okay, we're getting this question all the time. I always like to understand people's positions. I really want to know what the household income is, what the amount of debt is, how much equity they have in the home, how much of a safety net they have, because it's really important to look at the full picture when you're making a recommendation. You can't just make blanket recommendations to people. So what I encourage people to do is to meet with a mortgage professional that's going to do a full assessment. Right now, the majority of our clients are going into 2 and 3 year fixed rate terms. Okay, if there's an event planned in the short term, like in 1 year or 2 year, they're looking to sell, we're not recommending a 2 or 3 year term. We're probably going to recommend a 1 and 2. So it's all based on the individual situation. Everyone's different. Now, I know that's a roundabout way of not giving the answer, but for the most part, most of our clients are going 2 to 3 year fixed right now. Okay, but if you need help with that, call us. We'll help you out. Will the bank consider my collection of collectible baseball cards as collateral or an asset for a mortgage? They are valued at over 100 grand. No. I am a huge collector of sports cards and some memorabilia. So I wish they would, because that would be kind of interesting. But the reality is the banks don't look at that stuff. Like, it's not even worth putting on the application because it doesn't really mean a whole lot. So the short answer is no. But I sure like to see what the collection is, because I might be interested in some pieces. My mother recently passed, my condolences, and left her modest savings to the cat. As the cat's caregiver, I have access to these funds. Can they be used as a down payment? Now that's a fucking first. I guess if you're the caregiver, you have every right to manage those monies left for that cat. And if you're buying a home in which the cat's going to live in, I guess you're meeting the requirements of providing for that cat as its primary caregiver. So I'm going to say, yes, I think that should be straightforward. I love all of you. Great question. I am a Canadian citizen who has lived in Boston for the past 20 years. If I want to buy a cottage in Ontario, will I qualify for a mortgage in Canada? I still keep a Canadian bank account. Okay, that's an interesting question, because we get these situations from time to time. They do still have SIN numbers. What's going to be interesting is whether or not the credit bureau will be active or inactive. They do say they have a bank account, but whether or not they have any credit card trades or any lines of credits and stuff that are active would be interesting to know. But sometimes you have an inactive or a beacon score reject, is what we call it in the lending side, as far as a credit bureau score. And that may be problematic. If it's a strong down payment, good income that's reporting to the IRS and could be validated, there are lenders that will lend to folks living abroad that are Canadian. But give our office a call. We'll walk you through. We'll do the necessary underwriting and assessment and see what type of options are available to you. But that's a great question. Thank you. Do you see fixed rates coming down? Not anytime soon. I really don't. With the bond market rallying, we're seeing some elevated inflation activity. I just think we're going to be higher for longer, and it's going to be a while before we see any relief on the interest rate side. I wish I had better news, but the reality is that I just don't see it coming anytime soon. Shall I pay off debt or maintain liquidity? For most of you that have been following me 19 years on CP24's Hot Property and on this live show for the last 3 years, everybody knows I'm a big believer you pound down debt. When you owe nothing, nobody controls you, and the interest rate environment will not affect you. So if you have the ability to liquidate the debt and avoid having to pay these ridiculous higher rates that people aren't accustomed to of this generation, get rid of the debt. Pound the debt down to zero. As I've mentioned many times, if you have the ability to pay down your mortgage to half of what you started at. By the time rates double, your interest cost is exactly the same. So pound down that debt. You're always paying the most amount of interest when the balance is the highest. So get rid of that debt. I want to renovate my house. Should I refinance my house or take a loan of some sort to fund this project? Okay, first of all, if you are about to renovate your house, you need to get your financing in order before you start anything, okay? One of the big problems we see on a regular basis is people start the renovation, run out of money, and then come looking for financing help. And when that happens, okay, the kitchen's gutted, the bathrooms are gutted, and a traditional lender isn't interested in providing a line of credit or refinancing because the property's not in a condition that is able to be lent on, okay? They only lend on completed, finished homes, okay? So the key here is to understand what you're looking to do, and if you do believe you're gonna be short, don't start anything. Get the financing set up so you know exactly what you're dealing with. The problems we see are people not expecting private lending type rates and fees, and they just are sour over the situation because they're basically handcuffed. They're pigeonholed into that type of lending because the property's gutted, there's something ripped off, there's no roof, there's no kitchen, there's no bathroom, there's no flooring, and you know, there's wires dangling everywhere, and the appraiser is going to say it's not a move-in or livable home right now. So you're going to have to go into the private funding world. So what I would suggest you do is find out what your budget is. Make sure you're meeting with reputable contractors, designers that are giving you an itemized budget, okay? And make sure you don't see things like standard kitchen cabinets, standard fixtures, standard hardware. Because the chances are that price is based on the shittiest type of finish. And then if you want to upgrade, which most people do when they're renovating, the price goes up. So your budget goes up. Okay, so make sure you do your homework. Make sure you put all your ducks in a row. Reach out to us. We do this all the time and we'd be happy to help you out. I'm about to buy a new house. I heard something called porting my mortgage. Does this mean the bank can just switch my mortgage from the house I currently live in and transfer it to my new house? Okay. Portability is an option on most mortgages in Canada. What that means is you could transfer the mortgage in kind to the new property, provided you still qualify for that amount on the new home. Okay, so we have to make sure that that property is something that the lender will secure the mortgage on. So it's got to be a desirable home. We have to look at the proper loan to value, and you have to make sure that you now qualify again. You still have income. It's a new application. They'll port the term, okay? And you know, the qualifying criteria range from lender to lender. So it's really important that you fully understand what requirements the lender needs for you to meet that ability to port. Now, the problem we usually find is that a lot of these things are ports and blends, because very rarely do people transfer a mortgage of the exact amount to the new place. They either need less or they need more. In most cases, people are moving up, so they need a little bit more. And in situations like that, the lender will blend the rate or have two components of the mortgage. The one that's in place, that's about to expire, and then a new term. In cases like that, you're never going to have matching maturity dates because these lenders are very good at handcuffing you and keeping you there. So you're always going to incur some type of penalty when either of the two terms mature. But what you want to do is you want to look at the option and see if it's worthwhile. Now, in this current market, if you have existing mortgages at lower rates, you want to try to keep it. You want to make sure that you can port that mortgage and take advantage of that rate for the full term because you did a good job negotiating it in the past. And with higher rates, it's an advantage to port. We're seeing a lot more of it, but we are experiencing a lot of blends. So it's called blend and extend, okay? So if you do need help with that, give our office a call. We'll be happy to help you out. Are commercial mortgage rates less? If I have 4 rental properties, can I roll them into one commercial mortgage? Okay. First of all, commercial mortgages are not less. Commercial mortgages, I always tell people, and I prepare them for anyone trying to graduate from the residential world into the commercial world, you have the trilogy of fees, okay? You have inspection fees, you got an appraisal fee, and you got environmental report fees, okay? That doesn't count lender fees, broker fees, and the extra legal fees, because these contracts are a little bit more extensive and lawyers do charge a little bit more on commercial properties, okay? So the rates tend to be higher. Now, as far as having a commercial facility on a bunch of rentals, you got to speak to a commercial banker to see if they're willing to do a wrap or an operating facility with the security to support it, okay? Those tend to involve application fees, annual renewal fees. You know, there's some cash management products attached to it, because usually businesses do those type of operating wraps and stuff like that. But speak to a commercial banking officer and they can walk you through that.